Welcome everyone, welcome to the Tayde y el Ratón segment. Today we have a very interesting topic. We're gonna talk about money. We're gonna talk about investments. And Ratón, welcome.
Gracias, Tayde.
Bienvenidos.
It's good to be with you today. You know, I know that we're getting deeper and deeper about, the narrative, the new Latino or new Latina narrative. And there's all sorts of things that are happening now on our storyline. We're gonna have to start doing like they do on television shows, where it's like, if you didn't see the first episode and you didn't see the second episode, you have to know what's going on in the third episode.
Yeah.
Um,
This is like a Netflix series, Ratón.
yeah. And we have a sort of 60-day challenge for our Latina entrepreneur to be ready to go on a soundstage with Jorge Ramos to promote her service.
Mm-hmm.
And I'm going to get more into her service in the next episode.
Okay.
But today what I wanted to do was to talk about accreditation. And let's start from the beginning. So when you are an accredited investor, what do you think of when you hear those two words put together?
Well, that you have to register with the Secure Exchange Commission. That you have to be in their database.
Is that it?
Well, I mean, to be an accredited investor, yeah. And someone, of course, with a minimum amount of money to be able to participate in the market.
Okay. So as I understand it, there was a lot of activity over, the last 120 years in the financial industry of the United States. Let's just be specific to the United States. And at some point, when and this we could actually do a lot of episodes on, for example, like how Chase got started or any other financial institution.
That would be interesting. Let's put it on the agenda.
Yeah, because it's like a story out of the Wild West. Like you won't believe the truth of it all, right?
Mm-hmm.
But at some point, whenever you're dealing with these tremendous amounts of money, you start to get a lot of fraud. You start to get a lot of violence, oppression. Put a word to it. And so then what ends up happening is you start to get a lot of regulation.
Mm-hmm.
And in that regulation, they decided at some point, I don't know what year it was, but they decided at some point that if you were going to invest in high risk investments, you needed to have a certain amount of money available to you to become accredited.
Okay. Liquidity.
And roughly speaking, it's changed over time, but now it's like at around $1 million. So what somebody who's doing a real accreditation will do is they'll want to see almost like a bank statement, if you will, that shows that you have at least $1 million outside of real estate that's available to you.
Mm-hmm.
And what that does is it clears out all the suckers, if you will. Like it makes it a very exclusive club of people who can now choose to invest.
Mm-hmm.
And incidentally, there's a whole, I don't even know the right word to call it, but I'm just going to call it a culture in the startup community that deals with cap tables.
Mm-hmm.
And who's on the cap table and what their reputation is like, and whether or not, like, somebody who is a high net worth individual is not going to want to see a lot of Joe Sixpack on a cap table that they're joining. And the reason why they say this is because they think that they're unsophisticated. They think that they don't know what they're doing. They think that they're going to be problematic in some way, shape, or form. On the other side, the regulators think that they're going to be taken advantage of. And so they put these rules in place so that only accredited investors are capable of investing in certain investments, like startups, for example. There's also an honor system, Tayde. So when you go to Tech Coast Angels, which is very active in San Diego and in Orange County and in Los Angeles,
Mm-hmm.
They will ask you, you will have to put on the forms, are you an accredited investor? If you put no, you'll likely be rejected from joining those clubs.
Mm.
But if you put yes, they're not likely to ask you for bank statements to prove it. And I don't mean to single them out. It's just they're the only game in town, right? Like there's really only Pasadena Angels, Tech Coast Angels, and very few other reputable angel groups in Southern California.
Mm-hmm.
Okay. So as over the last 10 years, and I'm a beneficiary of this as well, because I just got into startup investing, I think 8 years ago. There's been a sort of democratization of information about startups. And so...
Is that how long ago it started, Raton? 8 years ago?
For me.
Oh, for you.
Yeah. So the venture capital started, in the 70s.
No, but I was asking you about the democratization of investment.
Oh yes, absolutely. It's happened. Well, we're in 2021, but it definitely happened from 2010 to 2020.
So it started in the Obama administration.
I would say yes. Between the Bush 2, okay, Obama, and everything that's happened since.
Okay.
And so now there's a lot of information that's out there for the world to really get an understanding of what it means to be an entrepreneur, what it means to be an investor. And then, probably like within the last 5 years, crowdfunding became something that was really popular. Now, when we talk about popular, I bet you that if you go to your family, for example, and you say, hey, have you ever crowdfunded a startup anywhere? The most likely answer is going to be no, especially in the Latino community.
Yeah.
That doesn't necessarily mean that they haven't crowdfunded or done friends and family funding for their own businesses, but it just means that we still haven't seen that Latinos are investing in complete strangers through some sort of group network of crowdfunding.
Yeah, because I mean, I think it's fairly new, and there has to be more information in our community so they can truly understand like the process and the benefits of participating in this type of investments.
Absolutely. And so with crowdfunding, though, there's been some sort of regulation attached to it, and that's been changing as well. And so the biggest change happened, I'd say 2 or 3 years ago, don't quote me on that, but look it up, with something that was called the Jobs Act.
Okay.
And so the Jobs Act relaxed a certain amount of freedom for normal everyday people to begin to invest in high risk investments like startups. So just so that we're clear, and this is, best case scenario, out of 10 startups, 7 of them will fail, 2 of them will break even, and 1 of them will pop. That's sort of the rule of hand that of how risky it would be to invest in a startup.
So out of 10, you only have like 10% of actually making some profit.
Yes. But what ends up happening is, again, best case scenario, that one startup out of 10 makes so much profit that it covers the other 9.
And that's what happens with the VCs and the angels. No, I mean, they lose a lot of money throughout different investments, and then they hit the jackpot with one and get everything back and
That's
more.
right. And the majority of venture capital firms, even the ones that you hear of, are not profitable.
Mm-hmm.
And we could go into that in detail, but everybody's hiding that information, right? Because everybody is sort of posing like something that they're faking it to make it, right?
Mm-hmm.
And so,
Mm-hmm.
but then there's really, and I just had the report, and I'm sorry that I don't have it in front of me, but it was something like less than 300 of all venture capital firms are the ones that are actually really successful at what they do, and they have a very long trajectory of, usually Stanford or Harvard, and then investment banking prior to or after their MBAs, and then they got into venture capital. So these were very successful financial executives that are now successful in venture capital, but it wasn't venture capital prior to that.
Yeah.
And so, going back to the crowdfunding, over the last 5 years, we've seen these websites pop up, and I'm going to be specific to one, which is called Seed Invest.
Mm-hmm.
So Seed Invest does something that I think is tremendous, which is called side-by-side investing. So they have one side for accredited investors, and they have one side for the general population. And so you can now take advantage of this financial concept that's called coattailing. So you can see, that there's somebody that's really important in American culture comes in and invests, and you basically take that as your recommendation for you to invest as well.
It helps with the credibility and trust in the investment.
That's right.
Mm-hmm.
And so one of the best side-by-side investments that I've seen on Seed Invest has been by an executive named Bill Gross. And Bill Gross has been wildly successful. He runs a company in Pasadena called Idea Lab. And recently, 2 years ago, I want to say, he started a solar company, and he put that on Seed Invest. And it was able to close its round through both accredited investors and through normal, everyday, crowd-funded investors. Okay.
Mm-hmm.
And so, and the reason why I'm bringing this up now is because our Latina entrepreneur is going to be able to take advantage of that, because on March 15th, they're going to change the regulations again.
So in less than a month.
And what they're going to do on March 15th is they're going to say, now you can crowdfund up to $5 million for a startup.
That's a big jump right there.
it's going to be a big game changer for on both sides, right? Like 70% of them are going to lose their money, but it doesn't necessarily have to be an extreme amount of money. You
Yeah.
might lose $100 to $1,000 or something, and it might not, break you in
Uh-huh.
the way that people have been broken in the past,
Mm-hmm.
through risky investments. But what it's also going to do is it's going to allow for, like, our Latina investor or entrepreneur to crowdfund up to 5 million of angel funding from her community.
Mm.
And so that is going to be really helpful to Latinos if, one, they do have an established community in place, and two, they don't have access to high net worth individuals or angel groups or even pre-seed venture capital firms in Silicon Valley or New York, which is usually the case as
The
well.
cases, yeah. Uh-huh. No, definitely, this is going to open up new opportunities in our community. So it's going to be very interesting to see the trends over the next few months after March 15, Raton.
Absolutely. So I wanted to bring that to the attention of your audience, is that, today we're at the 12th of February. And so between now and the 15th, it really is going to be beneficial for you to know how to communicate the value proposition of your startup.
Mm-hmm.
And Tayde, I saw you the other day on Clubhouse. I don't know if you've had the chance to be a part of a Clubhouse session. Have you?
I'm part of Clubhouse, but I haven't been participating in some of the forums yet. I think I have had a couple of conversations, but I'm not actively engaged just yet. But I think I need to start getting on board.
Okay. Well, so I was on one on Wednesday,
Uh-huh.
and it were three venture capital executives, all of them very reputable. And then anybody from the public could come in and pitch their startup.
Oh, wow.
And then what they would do is they would provide feedback and
Uh-huh.
say, from what you're telling me, this is what I would recommend that you do with your pitch.
And they had like a 2-minute elevator speech, or how did that work on Clubhouse?
They did. That's how
Oh.
they did it.
Mm.
And they did them back to back. So I listened in for about 5 of them,
Uh-huh.
but there might have been more.
That's
And what
interesting.
was really obvious was that, and these were people who had even already gotten investment,
Mm.
but when put on the spot, their elevator pitch was not good. And I'm not saying that as a criticism.
Yeah.
I'm saying it in terms of, when you know what venture capital is looking for,
Uh-huh.
you have to pitch in a certain way that makes it attractive to venture capital.
Yeah. So use those keywords that are gonna trigger them.
Exactly.
Mm-hmm.
And the main thing that they're looking for, and this happened in almost all 5 of them, is not the background
Yeah.
of why you started your startup. It's not even like your current status and, the problems and solutions or anything like that. It's, have you gotten to a point where a huge infusion of capital is going to allow for your startup to scale stratospherically, right?
Mm.
Like not from one sale to 100,
Mm-hmm.
not from 100 sales to 1,000, not even from 1,000 sales to 10,000. It's,
Mm-hmm.
how do you go from 10,000 to 10 million,
Mm.
right? Like, scale is exactly what it's meant to be, and without you putting more effort into it. Like,
Yeah.
You keep doing the same thing, and everything else
And
is
start
sort of
scaling up.
automated.
And does that have to do with the fact that there is like one successful company out of 10? I mean, that scaling, they're hoping that, I mean, if you put money in 10 different companies and all of them, you are assuming that they're going to scale up, you know that if 9 are going to fail, 1 will pay off for the rest of your investments. Is that why they are so obsessed with like scaling at that level?
No, so it's more complicated for an investor because an investor has to pay back. So if they're investing in 10 startups,
Yeah.
they have to provide a return on all 10 if they're going to ever see any money again from what's called their limited partners, right?
Mm.
Like, and sometimes their limited partners are like pension funds or like university endowments or any number of things. And so the minute that you burn yourself by saying, hey, you know what, 7 of them failed
Uh-huh.
and 2 of them broke even and 1 did kind of well, you know, like you're not going to get investment from those people for your next fund. So everybody's sort of kicking the can down the road. They're like,
Yeah.
they're grinding the entrepreneurs to know how to scale. And this goes back a little bit to what we talked about last week, which was, you know, even like our Latina entrepreneur, like she has a great startup.
Mm-hmm.
Jorgito Ramos is
Yeah.
even interested in it. He's going to put it on prime time.
Yeah.
And then she has to be ready for what's going to happen the minute that people are attracted to her.
Mm-hmm.
And that right there is a big inflection point for any
Uh-huh.
startup, because either you know what you're doing or you don't and you fail. And if you do know what you're doing, can you keep on doing it and scale?
Mm-hmm. Mm-hmm. Yeah,
Right?
exactly. Because when you get an opportunity like that, if you're not prepared, most likely you won't get another one. And you know, if you already have an investor and sees that, will probably walk away after.
Absolutely. So that's actually a good name for this segment, and I'll leave you with that, which is scale or fail, right?
Scale or
Like,
fail. Yeah. No,
and
definitely. But you know what, Raton? I mean, this is extremely important for our community to start getting more educated about it, because after March 15, I mean, you and I know that there are a lot of talented people in our community, entrepreneurs in our community, and a lot of them are working right now in their startups, in their concept, their ideas. They are developing them, and access to capital has been one of the main issues. You know, if you ask entrepreneurs in our community, but this is going to open up new ways of funding, and I think it's going to be very exciting to see what ideas come to the marketplace funded by crowdsourcing.
absolutely. Pues gracias, Taydazo.
No,
And next week we'll come back to the entrepreneur, and I'll tell you more about her service.
the service. All right. Thank you. Take care.
Saludos, Taydazo. Gracias.
Subscribe, like.